the infinite banking upgrade. It's just a visual depiction of how money moves through when we're doing a slow flip transaction. And I'm going to start with the typical, and I'm going to look at the upgrade. So let's begin. So first things first, we are putting money the typical way. We get income, whether it's W-2 or 1099, wherever it comes from, and we take that money and we put it into a bank, okay? And these reserves that we're putting in the bank, we're waiting for an opportunity, or it might represent reserves for your business, okay? But either way, when we put into a standard bank, we have to deal with leakage and loss in taxes. Leakage being the fact that money is being eroded by fees, by inflation, by low yield, okay? And loss in terms of opportunity loss. In other words, we have to put up with this. And if we decided to make a change and move that money into something else, we lose out on what we could have earned, okay? So there's an opportunity cost. So leakage and loss, and then taxes, of course. Taxes are that silent killer, if you will. All of it's kind of a silent killer. But and guess who gets to benefit this entire time? Certainly not you. It's the banker, the greedy banker who is lending your money out at 10, 15, 20%, meanwhile paying you less than 1%, okay? So it's not you getting the real benefit of your money. And so what happens is when we do find that deal, we withdraw the money, okay? Again, opportunity cost lost, okay? And we put that money either in our own hands or we put into our LLC account, and then we purchase those slow flips, okay? Easy peasy lemon squeezy, all right? This is a pretty straightforward process, and it is a typical process. Nothing wrong with it, but when you know better, you do better, right? And so what I'm about to show you now is the upgrade. So all we're essentially doing is we're changing addresses of where your money gets stored. That's it. We're placing it in we're putting your money in a place where it's treated with respect, with efficiency, okay? So the upgrade is income, again, same income, same place, W-2, 1099, or money from you decided to reroute money from a 401k or whatever the case may be, but you are deciding that the bank is no longer going to serve you for the majority of your reserves. Okay, it's going to be your infinite banking policy, all right? And it's set up to perform like a bank. And here, there's no opportunity cost, and it grows tax-free, access to the money tax-free, okay? And so that's what we're looking for here. And of course, who gets to benefit from this bank? It's not the banker. Actually, you. You are the banker, okay? And that's what we want. We want you to benefit the most from all the different features and facets of being a bank. And that only comes with you being the head of your banking system, okay? And so that requires when we access money, we do it via a loan, 5% loan, okay? Now, that money gets loaned to you or preferably the LLC, and the LLC distributes those funds, but those loans are on your terms. And so guess what? If you cannot pay back that loan, that's okay. If you need to pause on the loan, that's okay. If for whatever reason you need to want to pay back even more, that's even better, right? What better way to make even more money by paying yourself and treating yourself like one of your private money lenders and paying yourself back at that 12%, okay? You're just going to aggressively grow your cash value within your own system. So I highly encourage that to be a good steward of your own bank. But nonetheless, 5% is what they're asking for. And so at least, make that the payment. But again, if you can't make a payment, you're not going to get reported to any collections. It's off the records. It's completely private. The insurance company knows that if you leave this world, if you graduate, so to speak, from this world and you haven't made any loan payments, then that death benefit gets paid out to your family tax-free minus any loans, okay? So one way or another, they'll recapture that money. And for right now, though, just understand you have maximum control. And then you make your purchase into the slow flips. And oftentimes there are ways, depending on, your CPA, right? And where they, their knowledge level, you can essentially make a loan to your slow flips, all right? Charge yourself that 12% and then potentially deduct interest on that loan, okay? All right, so you are truly behaving like a bank in all capacities and all facets. But definitely want to consult with your CPA first, and ensure that they understand how that works. There are different documentation you want to have in place if you were ever to go that route. And certainly something, again, you want to consult with a CPA on for sure. Okay, that's all I have. And of course, I can't leave you without saying, when you control your income, you control your outcome. I look forward to our next education on the next module. Thank you.